Hey guys, this is another look at ZB, starting on the weekly log scale charts. We've hit the target of this version of the lows to lows extension. We've hit the 236 target here on price. And TYX shows that we've hit the 236 target on yield, but I like the trading view 30-year yield chart better, which shows that we have not quite captured this 236 target. We front ran it by about a basis point, but didn't quite get there. So let's just look at what's traded since the CPI number last Friday. Starting here in the yield chart, we had this channel up. Coming off of this black line down here is the 50% retracement of that highs to highs extension. So we had a 5-wave move up in this channel. We fell out of the channel on the CPI number and we traded into a long from lows, but we only got to the 38.2 retracement right here. And we ripped to the 618 target, had a reaction, and then poked even through it. So, this channel down here looks like a long wave 1, a very short weak wave 2 that could only retrace 38.2, and then this channel here could be either all of 3 or maybe one of 3. But the fact that we could only manage a 38.2 retracement suggests that, yeah, this is a third wave. And so what that looked like on price, if we go to the ZB 1 hour chart, is so coming out of the rollover, we've had this long grinding channel down that looked like 5 waves with an ending diagonal that we covered. And then on the CPI number, we traded along from lows, and on price, yield dipped to its 38.2 retracement of the long from lows. This right here is the short from highs on price, and you can see we didn't get it to the 38.2, and they front ran even the 618 target of this long from lows that traded. So obviously an aggressive sell, which argues that this channel coming down here is a third wave. And this third wave, it could already be complete. I mean, this looks like a clean 1, 2, 3, 4, 5, and this fifth wave stalled at the median of the channel, and there's a nice bullish divergence here between what would be the third of the third wave and the fifth of the third wave here. I expected this wave 4 to trade as a lows to lows extension here, and it may have. I mean, there are a couple of hourly wicks above it, but then maybe it retested and held, but it didn't run to target, which is interesting. But I'm not gonna overthink it. Whatever this is, it looks like 5 waves down, and if that's a third wave on the FOMC day, we broke out of this channel. We traded another long from lows that might be corrective. And if this is a wave 4, we've traded up into a lows to lows extension off the bottom of this big wave 1 up here. The wave that was in the channel coming down, there's a low right here, and we've traded up into that lows to lows extension, which would seem to argue that this is a 1, very weak 2, 3, 4, and we could be in a fifth wave down. Or more bearishly, this could be 1 of 3, 2 of 3, and we could be about to unload in a third of a third down. But this seems to be what's trading, and this structure will be wrong if we come up and overlap the bottom of this wave 1. So it has at least a couple of points to play with in here if it wants to make things difficult. I toyed with the idea that this was a wave 3 into this low here, where we spiked. This pink line is the 618 target of the short from highs, which is what traded. And so even though we didn't get there, we have to observe reactions at the targets, and we had this hourly spike of it, but we had a reaction to the 618 target. And so I was wondering briefly, if that could be the bottom of wave 3, because this, arguably traded a lows to lows extension to a new low. But no, I guess that's overthinking things. So let's just call this a wave, whatever it is, all of 3 or one of 3, and we're trading a lows to lows extension off the bottom of this wave 1. So if we just come down and make a marginal new low on an even more more bullish divergence, I know it sounds ridiculous to contemplate bullish scenarios, but at that point, yield would have probably captured this 236 target, and maybe there's going to be a retracement. So that brings us into, what degree of trend are we at? What is actually trading? And I am actually, I don't have a definitive answer to that. So if we just look at the yield chart, if we switch to the 4-hour view, everything since March, this March to May move, we've been in this channel, and we had what seemed to be a clean 5-wave move, 5 waves up, right? 1, 2, 3, 4, 5, and the equivalent channel on price was, this is the March high to the May low. Price broke out of that channel. Any version of this channel, price broke out of it. Yield has not. Yield sort of had this underthrow here, but this highs to highs extension is keeping us up in the channel and keeping this trend going. So what the yield chart suggests is that, at this degree of trend, this 5th wave is subdividing. So this would be a, off of this low, it'd be a 1, 2, 3, 4, 5. And that this isn't all of 5, but this last move is a 1 of 5. This would be a 2 of 5. This would be a 3 of 5. Let's just assume that we're going to go through the 236 target, and then we could be setting up for an ending diagonal. So let's say that the 4 of 5 comes back, overlaps the top of this 1 of 5, and trades this extension, highs to highs extension, for a 3rd time, and then we make another high in a 5 of 5. So yield, because we're respecting this sort of local extension in this channel, would seem to indicate that this 5th wave at this degree of trend is subdividing and extending. And it's possible that the same thing is happening on price. I showed in a previous video where that extension on the yield chart also traded on the price chart. Here is the first time we traded the 618 to target, and then the second time we've gone through the 236 target here. This 236 target of the yield variation of the extension is right on top of the 618 target of the short from highs. So it's really impossible to say which target is getting the reaction, both, either, neither. But the setup is also working on the price chart. And the 618 retracement of that yield to lows extension is right here on the daily chart. And a couple days before the rollover, we have a couple of daily wicks across it, but I don't think it's really broken. So what that would mean is that we're maybe creating an ending diagonal on the price chart as well, which would be, this is a 1 down and a 2 up and a 3 down, and then a 4 into the extension trading the first time. So this would be 1 of 5, 2 of 5, 3 of 5, maybe a 4 of 5 that comes up and overlaps, and then a 5 of 5. So that could be a process that's taking place. And we'll just have to watch the extension. There is really, if you're conservative, there's no reason to get bullish on bonds until we break this extension, which has just been made of iron. If we go through it and come back to a third time, that would be a critical test of the trend. So that's one possibility for what degree of trend we're at. It's that this fifth wave is subdividing, and it's going to be either a clean 5-wave move or some sort of overlapping ending diagonal. The other possibility is much simpler, and it's on the weekly chart over here, and it's simply that we had this rip across the channel that I was calling a wave 5, but maybe that was not correct, and maybe what is actually happening is that this was the 3 of the 5, this was the 1 and the 2, and so the 4 traded into a lows to lows extension off the bottom of wave 1, and this is the wave 5 down. In which case we've hit a target, and I know it sounds insane, but there is a bullish divergence on the weekly chart, right? If this is a third wave, it got deeply oversold, and this fifth wave is ever so slightly less deeply oversold, but it's there potentially. And so if on the hourly chart, if we're going to trade this extension to a marginal new low, which would it could create an even more bullish divergence here on the hourly chart, and then on the daily chart here, I'm not picking a bottom, but the divergences would be there, and that's just a fact. Make of it what you will. On all degree of trends, again, weekly, daily, and hourly. So, and I suppose, even more, the most bearish scenario of all would be that this was a wave 5 ripping across the channel, and that it's subdividing at this degree of trend. So that was a complete wave 5, but it wasn't all of 5, it was just 1 of 5. This very weak correction we had was a 2 of 5, and now we're going down in a 3 of 5, which is, I have trouble wrapping my mind around that, but I guess it's technically possible. But for some reason, I'm leaning towards the ending diagonal possibility, which is this is going to be an overlapping sort of grind down before some kind of reversal. So, but I really don't know. I really don't know. So, I'm short coming out of this lows to lows extension here. See how that works out. And the yield chart still has to capture this 236 target. And let me switch back to the 30-minute chart. Is that everything I wanted to say here? Yeah, I think so. I mean, these highs here are divergent, but I'm thinking that this is the top of the wave 3 right here, and this was a correction down, maybe a W. This spike here was a B wave high, and this is a C wave down. So sure seems like we need one more move up, but if the extension breaks, then yeah. I'm almost out of time. That's all I have time for. Thanks, guys.